Assalamualaikum warahmatullahi wabarakatuh and hi, my name is Muhammad Nur Aizan and I will begin with the first question. ITA or pioneer status? Choose the best option. The first one, pioneer status. Under pioneer status, a tax relief period for 5 years will be granted for such promoted activity or product. Tax relief period starts on its production day. Under pioneer status, only the qualified industry will enjoy corporate income tax exemption of either 70% or 100% for a period of 5 or 10 years depending on industry. Moving on to the second incentive, which is investment tax allowance. Investment tax allowance, or we short it as ITA, is an alternative to pioneer status PS. Both the ITA and pioneer status incentive are mutually exclusive. ITA is preferable over the pioneer status for projects which are capital incentive and which are not expected to generate large profit in a short time. Moving on to the question, since RSP Sendirian Berhad is a capital intensive type of business, the investment tax allowance ITA is the greatest alternative to reduce tax liability because pioneer activity does not require a lot of capital. The company cannot utilize its pioneer status. It will lead to sizable capital allowance claim and less income that is tax exempt. Additionally, the pioneer status shouldn't suffer damage. RSB Sendirian Berhad has only made a little profit in its fifth year of business. The company lost money in its previous four. As a result, it is critical that RSP Sendirian Berhad choose pioneer status as an investment incentive because the business require a lot of cash and experience losses for the first 4 years. So, for RSP Sendirian Berhad, ITA is the best option for them.
Assalamualaikum. I will continue the presentation. My name is Muhammad Alif Azazai bin Abdul Razak. Uh, so, uh, I will continue the presentation with the question B, which is the commencement of the business, which the business need to minimize non-allowable expenses. Uh, According to Section 33 and 39 of the Income Tax 1967, uh, these two acts have been regulate the deductibility and the non-deductibility of the expenses. So, what we can get from this ni, there are a few ways for the RSP sedang berhad to minimize their non-allowable expenses, which is the first one, they can minimize their non-allowable expenses by increasing their capital allowance. Next, they can minimize their non-allowable expenses by purchasing a vehicle amounting not more than RM 150,000 because the qualifying expenditure for the vehicle that was not more than 150,000 is just 100,000. Next, they can acquire a commercial vehicle which there are no restriction on the qualifying expenditure. Next, they also can register their employer in the training scheme, which make them qualified for the deduction from the firm gross revenue. Also, uh, at the last one, they also can consider to hire a disabled person, which can help in which can help in do a further deduction of the business gross income by uh, because the disabled person are entitled to double deduction from their remuneration. Okay, I pass to the next presenter.
The best option is by leasing the assets. This is because the company is expecting losses for the first 4 years. They can claim the full leasing charges incurred as a revenue expense as compared to outright purchase, which is only entitled to initial allowance in the first year and annual allowances in the subsequent years. Additionally, the full lease rental amount is subject to a revenue deduction in the year of incurrence. The lease charges will raise to adjusted loss because RSP Senyam Berhad expects slight losses in the first 4 years. At the level of aggregate income, the current year business loss would be permitted to shield other revenue, which are rental income and interest income, that in that current year. The unabsorbed business losses can be carried forward for a continuous 7-year period of assessment of offset any future business income if the current year business loss cannot be used in the specific year at the level of aggregate income.
Okay, I will continue with the next presentation, which is the interest restriction. So RSP Sdn Bhd, they need to be aware of the limitation rule, which can be applied to both Malaysian-based business and business owned by foreign investor. So according to Section 33, Section 2, a deduction of interest payment made on loan by a taxpayer with the intention of generating business revenue is being restricted. According to the rule, a company may deduct interest expenditure from its taxable income up to a specific cap. If the restricted interest cannot be used to be offset the income of the related investment, the SF interest expense cannot be carried forward and would be a permanent loss. The company should take into account that the limitation on its capacity to write off interest charge paid by financial institution and company with whom it has relation when assessing its tax obligation. Okay, these are the few steps that I have listed about the step that we need to be done to address the interest restriction issue, which is firstly, the company need to establish separate bank account to hold specific loan exclusively for the business use. Second, the withdrawal of fixed deposit to settle the borrowings. So what they mean, they need to withdrawal the fixed deposit to settle the borrowings. Third, they need to create sufficient non-business income to absorb interest applicable to the investment. Okay, that's all from me. I will pass to the next presenter.
It is mentioned that the disposal of the machineries will give rise to a huge profit. This will be treated as a balancing charge as the sales proceeds of the machineries exceed its residual expenditure. Thus, RSP Senyam Berhad should consider disposing the machineries to its subsidiary so that there will be no balancing charge or balancing allowance would arise on the transferor, as the assets would be deemed to have transferred at tax written down value of the transferor. In this case, RSP Sdn Bhd can dispose of the machinery to its subsidiary Inara Sdn Bhd, as RSP holds 75% of shareholding and the company has control of Inara. The disposal of machineries to Inara is subject to control sans provision of Income Tax Act 1967. Under the provision, the disposal value is ignored in the computation of balancing adjustment. The asset would be deemed to disposal at residual expenditure of the disposal, and therefore no balancing charge arise on disposal. However, if RSP Sdn Bhd decides to dispose of the asset to an unrelated company, this will cause the statutory income from business to increase because the balancing charge is added to adjusted income of the business.
Assalamualaikum. My name is Muhammad Amirazuddin Amali bin Azhar. My metric number is 2022949779. Next, I will present about group relief. First of all, what is meant by related company? Related company is defined as the company owns at least 70% of the ordinary share capital of the other company, or a third company owns at least 70% of each of the companies. In these questions, it shows that RSP as a holding company have 60% share on TSV, 75% share on Inara, and 73% share on TOP. It shows that Inara and TOP are related company with RSP, but TSV is not related company because RSP as a holding company owns share on TSV less than 70%. Hence, TSV Sdn Bhd cannot surrender its current year business loss to claimant company. Next, in order to eligibility for group relief loss, the following are conditions need to fulfill for both companies. First, group relief is available for all Malaysian incorporated tax resident company. Besides, claimant and surrendering companies each has a paid capital more than 2.5 million at the beginning of basis period. Next, both claimant and surrendering companies must have same 12 months accounting period. Claimant and surrendering companies are related parties. Apart from that, both claimant and surrendering companies are not currently enjoying certain incentives such as pioneer status, investment tax allowance, or reinvestment allowance. The claimant must have aggregate income in that year assessments, and both companies must subject to tax at full 24%. Based on the above conditions, all companies are related company to the claimant company, except for TSV Sdn Bhd, because not meet 70% shareholding requirements. Hence, TSV is not related company. Therefore, only Inara Sdn Bhd and TOP Sdn Bhd are eligible for group relief loss, and TSV Sdn Bhd cannot surrender their loss to the claimant company. 70% of the current year business loss of a surrendering company can be surrendered to its related companies. Any amount does not surrender will be carried forward to the next year assessment. Since TOP Sdn Bhd is forecast to have aggregate income 1 million per annum from year assessment onwards, therefore TOP Sdn Bhd will be claimant company, while Inara Sdn Bhd will be surrendering company because it is forecast to have a current year loss of 800,000 annually from year assessment 2019 to year assessment 2021. Now let's look at the computation of group loss relief. The claimant company is TOP Sdn Bhd. The aggregate income is 1 million, less with loss surrender from Inara Sdn Bhd, restricted to 70%. So 800,000 current year loss times with 70%, and we will get 560,000. The total income will be 440,000. The unabsorbed business loss carry forward will be 240,000. From the computation above, the unabsorbed current loss from Inara Sdn Bhd can only be surrendered to Top Sdn Bhd, restricted to 70% of their business loss. However, remaining unabsorbed current loss does not surrender will be carried forward to be deducted against the aggregate statutory income of company for the next year assessment. For TSV Sdn Bhd, since it is not related company and not entitled for the group tax relief, the current year loss of TSV cannot be surrendered and will be carried forward for the next year assessment. That's all from me. Thank you.